Okay, yeah, I know. Elon Musk bought Twitter. But the real question is, where have all the moonshots gone? And welcome back to the channel. Boys and girls, hit that subscribe button, make it explode, and then click the bell icon so you're notified when new media comes out. My name is Seth. You're watching Mind Your Biz. And today let's talk about a couple of the highlights of the highlighter that you can highlight in today's highlighted media. Mainly, today's news circles around both Elon Musk buying Twitter. Yes, the bid went through successfully, but also there are a couple of projects that I think would be important for me to share with you. This is not a sponsored video. I actually don't have a stake in any of these projects, except kind of maybe I'm thinking about getting exposure to a couple, and I'm willing to do work for some of the DAOs that they are associated with. But nobody's paying me to make this video, and nobody even knows that I'm making this video. It's kind of this weird feeling. I'm off the reservation here, guys. But let me show you. Today's top article has to do with Elon Musk buying Twitter. And on bitcoinist.com, they're talking about how that could be a good thing for crypto and Bitcoin in general. They said there could be fewer spam bots, and that means less theft and scams tarnishing the crypto industry. That'd be good. From a PR perspective, everybody would love less bots or fewer bots. And then they say it could be a sign that across the market that the cycle isn't done yet, but that we maybe have more headroom for Bitcoin, crypto, and other cryptos to pump. That would be cool, right? If we could return to green candle days, many green candle days. And they think all it would take is one spark to ignite another bull impulse. They think Elon Musk is the man to do it. And if a reversal begins from here, the milestone $43 billion Twitter deal might have put in a bottom to the recent stock market and crypto carnage. That's their take on it. I'm not so optimistic, but I think it's a very interesting news piece from bitcoinist.com. You tell me what you think down in the comments section. Is this realistic? Is this pie in the sky? Do you think that we could see a reversal because of one company, one social media platform acquisition? I mean, yeah, it was a juicy offer. And Elon Musk is talking about restoring freedom of speech, but he's also talking about certain kinds of restrictions like verification, right? And proof of humanity, which could mean registration and stricter so-called KYC for that platform. It could wind up being a little bit more Orwellian than we're giving it credit for. Elon Musk is a smart guy, and I don't think he's trying to be evil. But when it comes to putting certain controls onto platforms like this, there's a very strong likelihood that there will be accidental evil done. But you tell me in the comment section what you think. I'm here to listen to your thoughts, guys. Y'all are out of control. I love it. I'm here for it. Fear and Greed Index has just updated to a score of 27. It's up from 23. What does that look like? It looks like nature is healing. There's a recovery. We bounced down from neutrality and sort of skidded sideways in extreme fear, and we're starting to recover towards maybe a little bit of greed. Could it be because of this Twitter acquisition? Probably. Could it be because of the Bitcoin price? Possibly also. It seems to follow that where Bitcoin goes, the sentiment kind of follows. But we have this most recent candle. The update here is showing potential signs for a reversal bouncing downward further. So are we still on track to maybe see that $39,000 or $38,000? Yeah, maybe. It just delayed the center of that channel that we drew with the chopsticks. Maybe we are still going to see it, but we just took a little while, about a week or so, to bounce over to that new target, that new support level in the mid $30,000 range. But again, guys, do you come to this show for legal financial investing advice? I don't think you do. In case you've forgotten, though, I don't offer that. That's not what this channel is about. If you want to see some really great technical analysis and trading alpha, I strongly recommend that for cryptocurrency trading, you tune into my good friend Crypto Wendy's channel. She's got some great charts, and she knows what to do with them. I just, throw chopsticks on them so we know where Bitcoin has been lately. And we use that as proxy for the entire cryptocurrency markets. Let's get back to something that we do know, though, and that is GPU mining. The current profitability is not great. I'm not going to lie, guys. It doesn't look good at all. Current top of the line GeForce RTX 3090 Ti, a $2,000 card, is only drawing about $4 of daily profit. It's not awesome. It's really not a good look at all. You're looking at about a 500-day ROI, possibly a little bit longer, and that profit curve is turning down. The bottom of the line cards are not making any money at all. They're operating in the red. Even the older Polaris edition cards are barely making a quarter every single day in profit when you have power at that cost. I would be very cautious. Here are the coins that are actually turning a profit. Raven, Ethereum Classic, Ergo, Equilibria, Zero, Zano, Beam, Ethereum Classic again, Zero, Swap, sorry, there you go. Ethereum, of course, the king daddy of GPU mining profits. Firo, the privacy coin. Ryo, Conceal, both variants of the Monero privacy scheme and code base. And that's about it. Not much else except for Conflux and maybe one or two others like, there you go, Flux Network, and a couple others that may show profit. I think that's about it, but it's the usual suspects. So when Ethereum does go proof of stake, these profits pretty much go bye-bye, and we've got to find something else to do with those GPUs. I might have something. Hold on towards the end of the video where I share those moonshots. Let's take a look at our current portfolios. We'll start in reverse order. The Tenset gems. So not our GPU mining portfolio, but the Tenset gems. Looks like Everdome is doing least worst at only 8.5% down over the last 7 days. I've got high hopes for this, guys. In terms of a metaverse play, Everdome makes sense to me. When you talk about being able to play video games and being able to put ownable assets, on-chain ownable assets into video games, I think of something a little bit more like a current modern AAA title. I think of Cyberpunk 2077. I think of Doom Eternal. I think of anything that was a recent AAA title. I don't think of something that looks like, say, Roblox, or looks like Minecraft, or looks like Fortnite. I think of something that is very playable now, very, very playable now, so it will be playable 5 to 10 years from now with that sort of state of the art. So I think of Everdome when I think of a metaverse play. And I've got really high hopes for it to do well. I also have a position in this token, so I've got high hopes for the token as well, guys. But it's not doing as well as I hoped. Conga Exchange is down 10%, and then Tenset, the main launchpad itself, is down 32% over the last week. It's been a rough week for the Tenset gems and the Tenset launchpad. For the IBC Gang, everything related to Cosmos Hub. All right, it's taking a little bit of time for CoinGecko to load here. But for the IBC Gang, come on now. Come on now. You can do it. You can do it, CoinGecko. We believe in you. All right, we're going to try this one more time. IBC Gang, there it is. Thanks, guys. You applauded. You clapped, just like Tinkerbell. It came back to life. All right, so Terra is doing the very, very best. We can see our long-term hodl for a couple of these coins is doing just fine. Terra, Cadena, Secret, Cosmos Hub, and Osmosis are all doing okay. They're above break-even, at least, and some have shown some profits. Over the last 7 days, however, it's a little less rosy of a picture. There are some projects that are doing better and some that are doing worse. Thorchain is up 3%. Everything else outside of Terra is down in the dumps. And the worst of it right now is actually Osmosis. Even though it showed that it was okay for a long-term hodl, for the last week, it's been kind of getting punched in the face at 15% down. Sentinel, Akash, Comdex, Persistence. These are projects that I thought had strong fundamentals, but over the last week, with a market kind of out of control, they have not been able to hold their profitability as well as I'd hoped. But that's the IBC Gang in a nutshell. Hopefully, we'll see some relief very, very soon from this news about Elon buying Twitter. The junk drawer is showing us also that our moonshot plays with Everrise, Saitama Inu, Floki Inu, UFO Gaming, and Doge on Mars, as well as Luffy, have done just fine over the long haul. But some of the positions that we have in this portfolio, this paper tracker, they're made up, guys. They're a joke. We don't actually have $32 million worth of Everrise in a portfolio, nor do we have $133,000 of Saitama Inu. So these are positions we couldn't possibly have reasonably gotten. Over the 7 day, though, Luffy has done extremely well. And we could have gotten in on that 7 days ago, right? 4,100% up in 7 days. Wow. Wow. That's an amazing, amazing run up. But for our portfolio, that just brings us back into profitability where we were in the dumps before. We were in the red before. Doge on Mars, Ampleforth, Bone, Pancake Swap, Hex, Thorchain, Celsius coming back pretty strong this week, or okay this week. Everrise, Akita Inu, and Sushi are all doing okay, or X Sushi all doing okay. Our biggest losers this week, though, are unfortunately Baby Saitama, Floki Inu, Kishu Inu, Saitama Inu, and then UFO Gaming. So bummer to see those getting hit so hard. Proof of stake smart contracts. This is where I think the rubber's going to meet the road. We'll talk about a new option that I think is coming up really, really soon, or looks like it's going to be potentially. I think it's going to be proof of stake. I don't think it's proof of work, unless they are attempting to try to vampire attack Ethereum as it's going proof of stake and then get all the mining hash rate over to their network. We'll talk about this project coming up. It's one of those moonshots that I hinted at earlier on. But proof of stake smart contracts right now, we got Terra, Avalanche, Solana, Phantom, and Wax still in the money. The ones that are from our portfolio that still show something positive in the P&L are doing all right. But over 7 days, everything has gotten hit, guys. Terra, Tron, and Polkadot are the exception. They've all been in the green this week. Biggest losers this week, though, are Moonriver, Harmony, and Cosmos Hub. Ouch, you hate to see it. As well as Avalanche and Phantom rounding off the top 5 for biggest losers over the last week. FPGA mining portfolio, it's Cardano all day long, doing really well. And then the least worst loser is Digibyte. I don't know how that works, but there must be some people who have theirs, have some dormant wallets or have it staked somewhere. ASIC mining performance or ASIC mining portfolio, very, very weird looking. Zcash and Bitcoin are the only ones that are actually in the money for the long-term hodl. And over 7 days, the least worst performers, it's TBTC. TBTC? What the heck is a TBTC? Well, it's a wrapped derivative on Ethereum. It's a token. We've talked about this for a while. It's a token you can actually do liquidity providing for on Ethereum, on a platform or an AMM like Uniswap. And let's take a closer look at that. TBTC right now is up 19% this week and trades at a premium currently right now. It's not a rocket ship at this moment. If the chart is to be believed, at almost a $5,000 premium over Bitcoin, over the native asset. People who are LPing TBTC right now are making money hand over fist. They're killing it right now. So it's doing very well. It's not, strictly speaking, ASIC mineable, but you could wrap your Bitcoin on Ethereum into TBTC and you would have experienced these gains. And then you could have gone back to reclaim your Bitcoin, your UTXO. Unwrap it from the Ethereum network and get those same coins right back, potentially at a premium, or just keep them here in this wrapped representation and then get your profits, rinse your profits, and move on. Dogecoin up almost 12% over the last 7 days, clearly because of today's announcements. It's pumping because of Elon buying Twitter. Same with Zcash, pumping today. I think the only real good news here in this portfolio is today's news that is affecting some coins more than others, the ones that I mentioned just a minute ago. CPU mining portfolio also looks it looks a little hurt. I'm not going to lie, guys. It looks a little hurt. Our top coins in terms of the long-term hodl are Epic Cash, Raptorium, and Quantum Resistant Ledger, but they're down this week. Over the last 7 days, the only one that's in the black, the only one that's moving up is Wownero, up by 8%, and not from the last 24 hours of the news cycle, not from the Twitter purchase on the part of Elon Musk, just on fundamentals alone. So take that. Take that, meme coiners. Wownero has fundamentals as the testnet of Monero. Hard drive mineable coins. Only Chia is in the black over this last week, and even that is not saying much because it has hit a new all-time low at below $64 this week as well. From the time that we put it in the portfolio, it's down by almost 92%. It definitely crossed that 92% a couple of days ago when it printed that new all-time low. So Chia seeing a little bit of relief, but not much. Everything else is pretty much down for the count. What does that mean? When people say that they want something that's power efficient and that's going to be better for the world, then all of a sudden energy rates go up, the price of fuel goes to the moon, and everybody all of a sudden starts dumping these high efficiency coins. What does that tell you that people really value? I think it shows that people really value strong fundamentals, usability, and they don't really care whether or not it's proof of work or proof of stake. They just want it to be secure, do its job, and maybe be some fun too, potentially. If it offers some yield as well, that's not a bad thing. But that's our GPU or our hard drive mining portfolio. GPU mining portfolio loading up. Top of the list is still Flux, Equilibria, Ton Token, Cortex, Matic, Aave interest bearing, wrapped Ethereum, then Ethereum proper. It's actually 3 points higher, almost 4 points higher than Ethereum native, and then Wimble coin. Biggest losers over the last week. We've got Conflux, Satecoin, Etho Protocol, Haven, and Gemlink. Ouch. Hate to see it, guys. Some of these have really strong fundamentals, others a little less so, but It's really bummer to see that. Ryo currency is up by 26% this last week, but it is a micro cap at only 1.7 million. Don't be fooled. That could be fool's gold if you go chasing after it. Equilibria is up by 23%. Its market cap is $22 million, so maybe there's something to that. It's also showing profits in the GPU mining portfolio or GPU mining profitability calculator. Ton Token and Conceal as well are up by just a little bit. But guys, that's our current portfolio lineup. I want to talk to you about Moonshots. You know what to do with your GPUs. You know what to do with some of these other interest-bearing coins, with some of these other coins you can LP or that you can stake. And you might be wondering, like, what is there left for me to do with my portfolio? Can I avoid disaster? Is there anything I can do to help my portfolio yield a little bit more? Well, guys, I don't know. That's the bottom line. I don't know for sure, but I have a couple of ideas and I want to throw them your way for your consideration. Tell me in the comments section what you think. Don't just knee-jerk it and be like, Uncle Seth, you can't talk to me this way. I know everything, and that's a scam, and that's dumb, and I don't want to do that. Like, go, just pause for and slow down, Turbo. Chill. Read up. Get back to me. And give me some cogent arguments. If you think there's a problem, tell me what you think it is. Let's have a conversation here, guys. I trust you. Please trust me long enough to be able to present this to you. All right, first project is called mpunks at mpunks.org. And this hit my radar because somebody made a comment the other day on one of my videos, and I realized, I haven't seen this, but it's kind of a cool idea. It's kind of a neat idea. But it's not affiliated with Larva Labs or with Yuga Labs that has purchased the Punks IP. What they've done, though, is they've created a series of NFTs that is mineable. You're intended to use your GPU to offer them hash rate in exchange for getting your NFT. Now, as far as just a core idea there, I'm asking, wow, like, why didn't we do this the whole time? Why hasn't this been a thing the whole time? Why haven't people been able to mine their NFTs or mine fractional ownership of an NFT for a while? I mean, there's mining hardware out there. Ethereum is going to go proof of stake relatively soon. Why aren't we lining this up if there is an ownership economy with like REITs on chain and other real estate and other like utility tokens? If you want to get into the utility of NFTs, if that's the direction you want to go, or if you want to go with the artistic NFTs, if you want to go with the generative art, like that's fine. But why haven't we made proof of work part of that conversation? I mean, it's used to mint and to transfer NFTs on Ethereum right now anyway. Why aren't we using hash rate to unlock and mint NFTs? So the core concept I like. You tell me in the comment section when you take a look at this, what do you think? I'm not going to connect. I'm not going to download the GPU miner. I'm going to urge caution if you decide to also. But let me know what you think down in the comment section, guys. Nobody from their project has paid me to talk about them. This is not sponsored content. I always disclose if I have a sponsor for the stream or for the show. I don't have any sponsors for the show. I'm just showing you stuff that as a Hail Mary to try to figure out together, is there something we can do to improve our portfolios together? So I've been really vulnerable with you here. But take a look at it. And check that out. Let me know what you think. The next one is part of the Hex ecosystem. And yeah, I know, I get it. I hear some of you hissing and booing. Fine, whatever. Hex might not be your thing. Now, in order for us to stay friends, if you don't like hearing Seth talk about Hex, navigate away, come back in like 2 minutes. Go grab a sandwich or something, okay? I'm going to talk to the rest of the kiddos about this project, Maximus, that is part of the Hex ecosystem. So I think it's an interesting project, and there's only a few days left to mint any of this project during their initial phase. So after this point, if I tell you after the fact, you're going to be like, well, Seth, you didn't tell me. Like, right? Damned if I do, damned if I don't. I just want to tell you so you can evaluate it. And if you don't like it, don't participate. It's that simple. But if you do like what they're doing, I want to give you enough time to actually be involved. So the Maximus homepage is maximus.cash. They've got their white paper, 2 audits that are complete and have come back very well. I've talked to a couple of trusted members of the community, people whose opinion I value very highly, and they've told me that they think there's a very, very, very low risk of rug for this project. I'm actually considering taking a position in this project personally, just so you guys know. But what does it do? It essentially takes a lot of the upside of the Hex ecosystem, including Hex and Hedron, and it pools people's resources into a DAO to purchase the maximum size stake within Hex, because the Hex stakes pay more if you have a bigger stake, and they pay more if you have a longer stake. So they're creating the biggest and longest possible stake, but using the Hedron liquidity protocol, right? The Hedron liquidity scheme of being able to then transfer those stakes to somebody else and get payouts through Hedron. So they're making the best of the best. They're making sure the DAO is somewhat liquid and can liquidate if it absolutely had to. If something took place within their community, within the DAO, they could liquidate, and they can have a treasury that has provable liquidity to back the value of their token called Maxi. And it basically gives you the roughly equivalent value of Hex plus its growing stake value if it were staked, but with full liquidity at 1-to-1 during this initial minting period. So it only costs 1 Hex to get 1 Maxi, but then it will go up over time because all of the Hex that they aggregate is going to be put into that longest term stake in the largest amount they can with the highest liquidity thanks to Hedron, and then additional rewards that are paid out by Hedron. So very interesting core concept, in my opinion. If you were reticent to be a part of Hex and lock up your coins for a long period of time, well, this kind of gets rid of those excuses, right? It makes your investment liquid and offers as a fund instant access to the current market value of what a stake would be over that time period. So pretty cool. I think you should take a look at it, and I want to get your feedback, community. I'm probably going to take a small position anyway, but I want to get your feedback and tell me, hey, whatever. Tell me, Seth, you're crazy, or this is kind of brilliant. And Seth, you're by extension, you're brilliant for participating. Tell me in the comment section, guys. I want to get your feedback on that. Okay, and the final moonshot is one called Dogechain. I don't want to talk too much about this because I have to admit a bit of ignorance, guys. I've just barely started to really do a deep dive on the white paper, but the upshot is that it lets people wrap or bridge their Doge coins to become the utility token of this platform, which is an EVM style chain. It uses, as I understand it, the Polygon Edge. So which page is that on? Uses the Polygon Edge protocol to build, right? So, I mean, this is proven code base, essentially, at this point. Guys, you know, I'm a fan of Polygon. It's working. Yes, there are people who are like big time against it. It's working, though. But it uses Polygon Edge to create an EVM chain, right? So think Dogechain with EVM. EVM is proven. A bunch of projects are using it now. BSC, they took the DeFi world by storm during DeFi Summer 2.0, right? When they saw what happened with Uniswap and everything, using the Uniswap protocol on Ethereum for DeFi Summer 1. So BSC took off, and then everybody else realized, wow, we could probably do that too. But this, I think, takes the best of both worlds. So I'm curious. I'm going to find out more about it. You tell me what you think down in the comment section, guys. If you want me to do a deeper dive, you want me to try to maybe try to suss out from this group if there's a public leadership team or if there's somebody I can interview. As you know, I do that when we start to get into lower market conditions, returning to bear markets. I'm happy to do that. But you tell me what you think. Take a closer look at this project, Dogechain. Maybe jump into their Discord. I think I'm going to jump into their Discord too, see what else they have. I don't see many other contacts. Telegram, there you go. Twitter, also Dogechain family. But I'm going to go check it out. I think that you should too, guys. These three moonshots, I think the biggest risk right now, when markets are starting to return to just stay sideways and be a little bit boring, I think the biggest risk is not taking any risks at all. And this is not financial advice. Not financial advice, guys. But for my part, the biggest risk would be not taking any risks at all. It would be like, oh, cool, I'm going to leave my money in the dollar. Well, guess what? The dollar it clearly did double-digit inflation last year. They're only calling it 8.5%, but it clearly did double digits of inflation last year. And I don't think that the merry-go-round has stopped yet. I think we're in for round 2 next year. So I think the biggest risk is doing nothing at all with my savings and with my earnings and my profits. So I need to do something to try to get ahead of this double-digit inflation. And I'm trying to share these Hail Marys with you guys because this is stuff that, for me, I'm investigating. Tell me what you think down in the comment section, guys. As always, you're the reason I make this media. I love your face. Remember to stay private and mind your biz. Thanks for watching all the way to the end of the video. Remember to check out mineyour.biz, where you can sign up for Mine Your Biz Insiders, our occasional newsletter where we don't spam you, but we do send out occasional important information, including flash sales and important deals on privacy-preserving technology. This is one of the ways that we can talk to you without censorship and without the oversight of third-party media platforms. You can also check out the new Mine Your Biz phone, as well as merch, or sign up to become an affiliate for anything sold directly on the mineyour.biz website. You can earn a percentage of anything that we sell. Thanks for watching all the way to the end of the video. You're the reason I make this media. I love your face. Remember to stay private and mind your biz.